Infinite money glitch. So you guys are going to have a rough idea about Bitcoin is, how it works, all that kind of thing. You're going to know lots of the bits and pieces that I'm talking about today, but this is going to narrow down into some very specific details of why this one thing is crazy and why it's important to understand it and how it came about and how it works. So what do you guys think is the best performing stock since August 2020? Wrong answers only. Nvidia. That's a great guess. Any other guesses? AMD, not as good as Nvidia, but yeah, okay. Yes, Microstrategy. On August 10th, 2020, Michael Saylor, who's got the majority of voting rights over Microstrategy, got all of his company on board and started a Bitcoin treasury strategy, which we'll now call the infinite money glitch, and that's what I'll explain today. So you can see that this was from a week or two ago. It's returned 1,620% since they adopted their MicroStrategy coin treasury strategy, which beats even Nvidia and all the other top performers. So you can see it's outperformed 100% of the S&P companies in S&P. Coins only outperformed 99% of them, with a 400% ROI compared to MicroStrategy's 1,620%. I'll explain why there's such a discrepancy, because MicroStrategy's main goal is to buy and hold Bitcoin. You see Magnificent 7 done really well, 243%, but smoked by the other ones, and then the S&P returned 73%. This is since August 10th, 2020. What is the company MicroStrategy? So from 1989 to 2020, they were the leader in business intelligence and analytics software. So before we had AI and had all the great data stuff we had just now, they were innovating in data and tech in the 90s and the 2000s, etc. As of 2020, 2018, 2019, 2020, they had a large amount of capital from shareholders, and they were getting squeezed out by other big companies, by Microsoft and other data analytics and progression and AI and all these other aspects. So they had a dilemma. Would they sell the functioning parts of the company off just now and wrap things up, or would they start doing buybacks with all the capital that they had on hand, or did they have some other method that they could use which would be a better use of their shareholders' capital than returning it to them, or trying to fight giants like Microsoft, or try to find a niche or develop their business? So they figured out something that they could do.
They were part of the dot-com bubble?
Yeah, they had a big run-up during the dot-com bubble, and they went way up and then they went way down. But yeah, I know next to nothing about them before 2020, to be honest with you. So Michael Saylor is the CEO, or he was the CEO, and now he's on the board, but he has the controlling shares at the moment. So to endeavour on a Bitcoin treasury strategy like he did, he had to do a lot of research, get way down the rabbit hole with Bitcoin. So this is a tweet from 2013 where he said, "Bitcoin's days are numbered. It seems like just a matter of time before it suffers the same fate as online gambling." So there's a spectrum of where Michael Saylor was in 2013 and where he is now, and all of us are somewhere on that spectrum, and you may not even know you're on that spectrum, but depending on your attitudes and opinions towards Bitcoin, you are somewhere on that spectrum. Next one please. So that was before Bitcoin. Now with Bitcoin, in August 2020 he decided to convert all the company's cash holdings. Well, he done it in a gradual process, but he converted a large portion of the company's cash holdings to their treasury to Bitcoin, and he offered all of the existing shareholders a very good premium to their current share price to cash their money out. And then the people that didn't cash their money out stayed in. They first got part of the treasury converted to Bitcoin, and then over the coming months all of it converted to Bitcoin. So what Michael Saylor's done is he's promised that MicroStrategy's main strategy now will be they will buy and hold Bitcoin, and they will not sell under any circumstances, or well, almost any circumstances. So the financial engineering that he came up with is what we'll call the infinite money glitch, and that has been the idea to use Bitcoin as a corporate treasury is one that they sort of invented and that they've popularised. There's now over 50 companies that do this. There's Metaplanet in Japan, they're doing it pretty big. There's a Semler Scientific, who are a biomedical research company in America, they're doing it. There's many of the Bitcoin miners hold it, and there's been another 5 or 10 in the last 2 months have started doing this all across the world in different concepts. And there's even a Canadian company that started doing the same playbook, Solana. So what the fuck? How is a unique piece of financial engineering, how does it work? Next slide please. So this will be quite complicated, and I'll simplify it down to the absolute basics, and I'll try and get through this in 2 or 3 or 4 minutes, and then maybe a few questions if you've got anything to ask about how it works. So it's a simple process, 4 steps. Step 1, borrow $1 billion. Step 2, buy Bitcoin with it. Step 3, wait. Now the wait part is what you're basically doing, you're borrowing dollars, you're buying Bitcoin with it. So it's essentially a bet that Bitcoin will outperform dollars. That's what the company's philosophy and strategy is. Now, this is where the unique bit of financial engineering comes in, and what we'd call the infinite money glitch. Now, if we go back to step one, how they borrow the $1 billion is through what's called convertible bonds. So essentially they borrow $1 billion for 7 years at a 0.5% interest rate. That's one way that the debt can be considered. The other way is they take whatever today's price of the Microstrategy stock is, for example, $200. Then they say, right, well, we'll do this 7 years of debt, $1 billion at 0.5%. Now, nobody in their right mind would take that trade. The reason, the incentive why they get to take that trade is because they offer them the option to buy the stock at a 50% markup to what it is today. So both of those things sound like crazy things that nobody would want to do. I'll explain why that exists in a moment. So you borrow the $1 billion, you either give them their principal back after 7 years with the 0.5% interest they've got each year, and you can give them that principal in cash or in shares. Now, the other way this could work is if they convert the $1 billion of share, the $1 billion they gave you, if they accept that back in shares instead of the cash, then the bonds have been converted. Now, if the current price is $200 and they do the strike price of $300, if in each of the 7 years in the last 60 days of the financial year, if more than 30 of those days it trades above the strike price of $300, then they will have the option to take shares at that point and just wipe out the debt. So after what's happened with most of the convertible bonds so far is it's traded above the strike price at that end of the year and they've converted them. Now at the moment they've got some out to 2031 and 2032 with strike prices in like the 240s range, which I think is going to be converted this year. So how this works is either they just give them their money back. This is the very unlikely scenario. The more likely scenario is that the money goes up. Now, existing shareholders might think this is bad. So why this is good for existing shareholders is because when they borrow $1 billion and they buy the Bitcoin, step two, their Bitcoin per share increases. So if one share of MicroStrategy has 0.1 Bitcoin in their treasury, at this step two here, they might buy that and you might have 0.2 Bitcoin per share in your treasury. Then at step 4 you get diluted, so it goes back down, but it goes back down to higher than 0.1 because of this strike price. Now, what kind of lunatic would offer you a loan of $1 billion for 7 years at 0.5%, or pay you $300 today for a piece of stock that's only worth $200 today? Now, how this works is, to understand why this is a thing and why this happens, it's a concept of stranded money in the financial system. So if you've heard of the concept of stranded energy in the energy system, so say you've got a wind farm and it's nighttime and the wind's blowing really hard and they're getting lots and lots of energy. They've saved all that energy into their batteries and they've now ran out of battery space, but nobody wants the energy at 3 AM in the morning. So you've got this energy that gets burnt off and nothing happens with it. Right? A similar concept happens with the money in the financial system. So my personal story of how I got into MicroStrategy is, in the UK, there's what's called the investment savings account, the ISA. So you can put £20,000, about $25,000 a year, into an investment account, and any gains, returns on it are completely tax-free. So I was looking at this and I was saying, right, I've got my money in my ISA, I can put it in this S&P and I can make 8% a year, right? Or how about I take a ridiculous deal like the one that's happening here with the convertible bonds. Buying MicroStrategy's share price offers a similarly ridiculous on the face of it deal, which is you pay a premium for the Bitcoin that they hold. So for every one share of MicroStrategy worth like $100 worth of share, you'll get like $50 worth of Bitcoin for that share. So why would you pay a 2x premium to own MicroStrategy? Well, in my case, I had the option of, I could buy MicroStrategy and get 1,600% returns over the course of 4 years, or I can get 8% returns a year on the S&P 500. So my money was essentially stranded in that account and couldn't really do anything productive with it other than buy this, because I can't buy options, I can't buy Bitcoin, I can't buy anything else. I had very limited options what to do, so that's why I done it. Now, why do these large corporations buy convertible bonds and execute this strategy here? They do it because if they were to buy $1 billion worth of stock in MicroStrategy, their risk analyst team would go absolutely insane and they'd be like, what are you doing? This is crazy, right? So, but there's a large market of pensions and companies that can buy corporate debt, corporate bonds, and that money has got the option of putting it in a 5% a year treasury, or buying corporate debt at like Microsoft or Facebook or something, where you've got to fade all the risks of the financial system, all the risks of the people, all the risks of that. When you buy MicroStrategy, the core business of MicroStrategy still goes on, generates some cash flows, but it's worth about $1 billion. As of like a day or two ago, the market cap at MicroStrategy was $50 billion. So most of what you're buying when you buy MicroStrategy is literally Bitcoin with a premium on it. So this stranded money for corporate convertible debt is how they're able to do what's called the infinite money glitch. And then for individual shareholders, that maybe you've got a pension fund and you're thinking, okay, I can buy this SP500 in the pension fund, but I don't want to just barely beat inflation. You might want to put your money in MicroStrategy, where you're getting these crazy returns, you're getting massive exposure to Bitcoin, you're paying a crazy premium for it, but if it's just a zero-sum game where you're talking like 1 year's time, what's going to be worth more, MicroStrategy or S&P 500? It's just an absolute no-brainer, because despite the fact you're paying these high premiums, it works. MicroStrategy is actually one of the simplest companies in the world to model and think about and trade. You don't have to worry about the market conditions, you don't have to worry about any of this. Really, really super simple. All you need to worry about is what price is the MicroStrategy stock, what price is Bitcoin, and then how much Bitcoin do MicroStrategy hold. So when I took this screenshot like a week or two ago, the stock price was $200, Bitcoin was $65,000. So they had got a 40 billion market cap for MicroStrategy. They were holding $16.5 billion worth of Bitcoin. That gave them a net asset value premium of 2.647. So what that means is, well, for every one Bitcoin that you've got in MicroStrategy stock, it's costing you 2.67 premium. So this premium is basically what you're paying to own it as a shareholder. There's complications about how you calculate this, because they also have the original business, which is worth about approximately $1 billion, but is it worth $500 million or $1.5 billion? How do you value that? And then the outstanding convertible debt, there's two ways to consider that. One is you could just assume that all of those shares are, if you just converted all those shares today, what would be the status of it? Or you could consider it as the debt at 0.5%. MicroStrategy's done over 40 of these debt convertible bond issuances, and they're currently sitting with an average interest rate on that at 0.62%. So that's the whole concept. So MicroStrategy does this infinite money glitch, and then you as a shareholder get to decide, well, how much Bitcoin have they got, what's the share price just now, what do I want to do here? Now, because of this, if you take the volatility that Bitcoin has, MicroStrategy will be volatility on a multiple of that. What that leads to is lots of options trading on it, shorts and longs and all those kind of things, and that increases the volatility. What happens is all of this stuff goes on, and that causes fluctuations in this net asset value premium and their market cap, etc. And somehow this all just works to number go up, which is just awesome. So here you can see a chart of the net asset value multiplier, and at the daily close, each one of these dots is a daily close where the net asset value multiplier stopped. So up here you can see there was a very brief time early on where you were, for every one Bitcoin you held in the MicroStrategy shares, you needed like 6 shares worth of MicroStrategy. And then you can see lots of dots here below 1. So see, at this point in time, if you bought $100 worth of MicroStrategy, you were actually getting like $120 worth of Bitcoin. And every time I look at this chart, it fries my mind how many dots there is below that one line. So today, or when I took this screenshot, the dot was about here, and you can see the chart and how it works. The financial engineering leads to this situation where you've got the net asset value premium. Now, there's a debate about this premium. Can they sustain a high premium, a 3, 4, or 5, or 6? Or when it gets to a higher premium, should MicroStrategy harvest that high premium to increase the Bitcoin per share of holders? So at the moment, the premium's like 2.5, say. What they can do is they could do an at-the-money offering. There's 40 billion market cap. There's 16 billion worth of Bitcoin that they're holding. They could borrow $5 billion by issuing $5 billion worth of new shares. They could buy $5 billion worth of Bitcoin. Now what that would do is it would decrease the net asset value premium of the shares, so the shares would get diluted, so your share price would essentially go down at that point, because they'd print 5 million shares and they'd do that, but your Bitcoin per share would go up. So at the moment there's a debate about whether they should try and maintain a high net asset value premium, or they should harvest the high net asset value premium to increase the Bitcoin per share. And we'll just have to see what happens with that. And there's a couple of links there, and I'll put more links in. So this whole idea it's new, it's novel, it's complicated. Michael Saylor essentially invented it since August 2020. Some other people have taken it on. There's different ways to do it. Yeah, the data to do it is difficult. It's hard to find, and it's difficult to parse. So yeah, do your own research and do that. Now, I am in no way a financial professional. I worked in sports betting, writing algorithms and doing data modeling and got a computer science degree, do computer programming, played poker for a living, so I'm in no way, shape or form TradFi. So I literally entered this whole thing with a completely fresh perspective, and I'm an idiot. So take everything I say with a grain of salt, do your own research, and yeah, I'm happy to talk to you all about how this works. Cool, cheers. Thanks. Any questions?
In the last offering, do you know how much they...
The last offering, they asked for 600 million worth of convertible bonds. This is the last but one. They asked for 600 million of convertible bonds, and they had so much demand, they upped it to 850 million. So that's money at institutions where they might have some already, or they might be looking at the performance of it, and they're going, do we stick this in 5% treasury bonds, or do we just put a small allocation into buying these convertible bonds? It sounds absolutely crazy, but the returns on it are just proven and cool. So they asked for 600 million, they ended up doing 850, and they've done over 50 of them, and they'll get bigger over time. I think the last one might have been 1 billion even, or 900 million, so around about there.
How much of the Bitcoin supply do they have?
They have 260,000 Bitcoin at the moment, which it's more than 1% of the total supply, 2.1 million, but it's probably about 2% of the realistic supply if you take out all the coins that have been lost. There's only 19 million mined so far, 19.6 million mined at the moment, and there's 4 million kind of confirmed lost. There's 1 million in Satoshi, so you're looking at 14, 15 million in existence at the moment, and they've got 250,000 of it. BlackRock has got 400,000 in their ETF.
The investors, do they have the assumption that Microstrategy is going to keep doing those offerings?
Yes, so Michael Saylor has been very clear he's never going to sell the Bitcoin, but and there's two main ways he can do it. He can keep going with these convertible bonds, or he can do an at-the-money offering where he just goes whatever. So Max Kaiser has recently said on Twitter he thinks that Michael Saylor's just going to come out with a $25 billion at-the-money offering, buy $25 billion of Bitcoin and then cause absolute chaos. There's also a self-fulfilling prophecy, a positive cycle here, where when MicroStrategy do these offerings, they then buy Bitcoin, which pushes the price of Bitcoin up. I mean, if you just go out and buy 100,000 Bitcoin, that's going to increase the price of Bitcoin. At the moment, the over-the-counter desks are saying they're a real low, and I think the amount of Bitcoin available on exchanges was something like 3.5 million, and it's now down to less than 2.5 million. So one of the main reasons why I'd done this, so I only started investing my own money in January 2022, and just in that investment savings account, and it was just all in the index funds, all in the SP 500, the World Index Fund. And then in January of this year, I decided, doing lots and lots of research about MicroStrategy and Bitcoin and everything like that, and I was convinced. So I moved 65% of my portfolio into MicroStrategy, and that's went well. That was at $110, and today it's like 260. So yeah, that's went well. But I mean, that's one trial. So yeah, I'm in no way endorsing this. Completely do your own research. Any more questions?
So let's say I'm really interested in Bitcoin, like Bitcoin.
Yes.
So I'm choosing to invest, let's say, $100 into MicroStrategy instead of $100 in just Bitcoin itself.
Yes.
Is it because we think the market will price a premium?
So if you are going to buy Bitcoin, Michael Saylor said this himself, go buy Bitcoin. If you're happy to self-custody it and you're happy to do that, the best thing you can do is buy Bitcoin. Now, I had money that was stranded in that investment savings account, and I couldn't buy Bitcoin with it. I couldn't buy the Bitcoin ETF with it because I was in the UK. In America, you could buy the Bitcoin ETF, so you then have to decide, do you want to buy MicroStrategy or do you want to buy the Bitcoin ETF? If you buy MicroStrategy, you're going to pay that premium. So for every $100 you put in, you're only going to get $40 of Bitcoin to your name. But what you're going to benefit from is the corporate treasury strategy that they're doing. So every time they sell those corporate bonds, say it's $200 price today, they sell it with a strike price of $300, that's essentially your shares going up 33% in value. Like if that outcome happens where they convert, which they've done to everyone so far, and they're doing at the moment to all the ones like that they've got. So if you can buy Bitcoin and you can store it yourself, and you don't have tax implications of it coming back on shore, that's the dream. But if you have got a tax advantaged account like my ISA or like your pension or your 401k, or you're a company that can't buy individual stocks but you can buy corporate debt, then that's the people it's used for. So just as a random individual, it would completely depend on your tax strategy and how you wanted to do it. So if you bought the Bitcoin, you've got the one Bitcoin. If you buy the MicroStrategy, you've got like 40% of the Bitcoin you would have got otherwise. However, that you've bought at 40% on the dollar has a kind of yield, it has a compounding strategy, which is that every time they do one of these debt issuances, it improves. So that's a decision you have to make for yourself. And if you've got stranded money, like I did, or like these corporate funds do, or if you're just looking at your pension and you've got the option of putting it in S&P 500 or putting it in Microstrategy, like at least a small allocation there just seems to make sense. So yeah, good question.
Now $4 billion, is it the options strategy?
I've not heard this. So the earnings was just last night and I've not caught up in any news for it. But they said they were going to raise 42 billion.
Yeah, 21 mil to sell their equity, 21 mil in some stocks.
Okay, that sounds crazy. That would be awesome. So say they've done a 50 billion offer and their current market cap is 50 billion. The premium would go from 2.8 to 1.4. However, you would go from having 2.8, you'd maybe have a certain amount of Bitcoin per share. What would happen is your share price would half. Right, so the current company's worth 50 billion. They issue 50 billion at the money. Your share price was $200. Your share price is now going to be $100. Right? But before that, you had 0.1 Bitcoin per share. They're going to buy the Bitcoin at today's price, which includes that premium. So you're going to go from having 0.1 Bitcoin. Now, if it went to 0.2, that would be a break-even trade. But your Bitcoin per share is going to go to 0.35. Because they are harvesting the premium at that point to give you more Bitcoin per share.
The key thing about this announcement is it's over a 3-year period, whereas all the other issuances are like immediate, so it's like a schedule of issuances.
Okay, perfect.
So the different price that they buy at will be over the next 3 years, like it's like a DCA almost of issuances, rather than just like randomly at the time that they can actually issue the debt.
Yeah, now, I'm not completely up to date on the at-the-money offerings. I'm not sure if they've even done any at-the-money offerings of. The main way they do it is through the convertible debt, so that makes sense. Now the limit, the kind of very soft limit that they've got on issuing these convertible debt bond offerings is that their existing small business, it's worth like $1 billion, it's making like 100 million a year. I think they made 126 whatever this year. Now when they're borrowing this debt, before it gets converted, they still have to pay 0.5% interest on it or 0.87 interest on it. Their average of that debt that they've got at the moment is, I think, 0.62%, like today. That then limits just how much of that they can take on because they need enough cash flow to pay that small amount of interest as it is before they can take on more debt. So at the moment, say they've got like 4 billion worth of these outstanding and they're paying like 0.5% on that 4 billion. If their cash flow is doubled, they would be able to have like 8 billion and they would be able to service twice as much debt if that cash flow for the business doubled. The business done data analytics. Earlier this year they released a product, Bitcoin Orange or something, and it's basically an Outlook plugin where you can do like a lightning transaction type thing and you can get a secure key to encrypt your emails. One of the kind of technical products that they're still offering for the business that's generating the cash flow that's allowing them to have a certain amount of debt to service. Cool. Yeah. Okay, great. Thanks very much.